Could China overtake Taiwan to become the world's largest semiconductor manufacturer? With the pace of growth in China's chip sector, industry watchers are saying it may happen in the next few years. So what's driving the boom and what does that mean for Taiwan? I'm Divya Gopalan and you're watching Connected on Taiwan Plus. To explore China's ambitious push for a self-reliant semiconductor ecosystem, we are joined by Stephen Ezell, Vice President of Global Innovation Policy at the Information Technology and Innovation Foundation. And from Washington, D.C., also we are joined by Ray Wang. He's the Research Director for Semiconductors, Supply Chain and Emerging Tech at Futurum. Thank you both so much for being on the program. I just want to start with Stephen and just get your thoughts on where China is right now in its manufacturing, chip manufacturing sector, and whether it is able to, or how much it is supplying its own industries.
Well, ever since 2014, when it articulated the National Integrated Circuit Plan, China has articulated a strategy to develop a fully autonomous closed-loop semiconductor ecosystem within the country. That goes all the way from research and development of chips to their design, to their assembly, the fabrication, and the assembly, test, and packaging. In the Made in China 2025 plan, China articulated a desire to be 70% self-sufficient in semiconductors by this year. The reality is that they're probably 30 to 40% self-sufficient at this point, but they've made very significant progress in certain segments of the semiconductor industry. In particular, when we look at legacy semiconductors, what are called mature node 28 nanometer or more semiconductors, this is where China has made tremendous progress. In fact, in 2024, China added more new chip making capacity than the rest of the world combined, particularly in this mature part of the marketplace. The country's share of global mature chip node manufacturing is expected to reach 39% by the year 2027.
Interesting. So, Ray, what are your thoughts on where China is right now with regards to its manufacturing and how much it is supplying its own industries?
Yeah, perhaps I can kind of follow up on Stephen's note, right? I think besides just kind of looking in like legacy chip manufacturing, if you look at their semiconductor equipment supplying for the legacy chips that ranging from the 7 nanometers to 28 nanometers, they are making significant progress beside, except for lithography, right? Companies like ACM Research, AMEC, and NAURA, right? They are making significant progress in etching into position, supplying this range of the chips, right? And that shows a significant progress in terms of their self-sufficiency in semiconductor manufacturing equipment. And this has been a kind of hurdles over the past decades for Chinese semiconductor industry after a lot of export control coming into play since 2019.
Right. So before we continue, I want to go just throw a few figures in there looking at what is projected for China. Now, according to the Yole Group report on the status of the semiconductor foundry industry in 2024, China held 21% of the global foundry capacity, while Taiwan controlled 23%. But according to the International Data Corporation, that's a global market intelligence and data provider, by 2030, China is projected to edge out Taiwan and reach nearly 40% of market share in foundry capacity for 22 nanometer and bigger mature nodes. It expects Taiwan to drop down to second place in that segment. So, Stephen, what do you make of those figures there? Do those projections look realistic to you?
Yes, I think those numbers are accurate. The industry group SEMI, which represents the semiconductor manufacturing and tooling industry globally, notes that from 23 to 2025, there were 97 new semiconductor fabs under construction globally, with 57 of those being in China. So certainly those numbers concord with the stat I had earlier that they're expected to reach nearly 40% of the market by 2027. Also, it's important to note that in this mature node segment of the marketplace, Chinese companies are selling their products about 20 to 30% lower in prices than their peers. So if you look at Chinese competitor Giga Devices, which makes microcontrollers, for instance, for the appliances or automobiles, the economies of scale that China will bring to bear in this part of the marketplace through this massive capacity is going to significantly disrupt the economics of the industry globally and represent a very significant challenge for competitors such as NXP, Renesas, and Finon, et cetera. It should also be noted that concomitant with this very significant industrial build-out is the reality that through promulgations like Document 79, the Chinese government, for instance, instructed EV makers to, quote, remove foreign semiconductors from the supply chain wherever possible, and set a goal that by the end of this year, at least 25% of all semiconductors in Chinese EVs be domestically produced. So the production effort goes hand in hand with the Chinese government putting the thumb on the scale to Chinese companies that they will switch out foreign suppliers with domestic producers in this industry wherever it's possible.
So given that, Ray, what does that say to you about the U.S. efforts to hamper or restrict or curb China's semiconductor industry? Has that worked at all, or was it, or what's been the impact of that?
Yeah, I think we kind of talk about two different things here, because most of the U.S. export control is actually focused on advanced node, which is under 7 nanometers, right? But a lot of the capacity build out right now happening in China is actually between 7 nanometers to 28 nanometers in both logic and memory, right? So I think we are talking about two different things. I think the first thing is the capacity build out. Well, I would say it's like partially it's because of export control, because you couldn't put really investment in advanced node, right? So a lot of investment essentially go to legacy chips. But I think the main driver for the capacity build out for legacy chips is essentially there's a significant drive for self-sufficiency in building up their own semiconductor supply chain. And number two, clearly they also have the demand within China. But I think like Stephen mentioned, right, the capacity build out was so fast, it pressured the margin performance of other legacy chip makers in Taiwan and in other places. And this is create a significant market disruption problem. So a lot of players across the semiconductor ecosystem.
So given that, Ray, what do you think has been the impact on Taiwan, especially when we're looking at, as Stephen was saying, China managing to squeeze the prices?
Yeah, 100%. So there's a couple of companies that's been significantly impacted over the past 3 years. And companies like UMC, companies like PowerTech, Semiconductor, they are significantly being impacted in terms of their profit margin performance and their overall revenue. Because essentially, when there's a lot more capacity out there in the market, your company is selling your products or your chips, your profit margin will significantly be impacted, right? Assuming you sell 10,000 chips, all over from 2020 to 2023, but with in continued decline in profit margin. So essentially, your revenue you gain over the years is actually declining, right? And that's the problem that companies like UNC has been facing. And one of the strategy that Taiwanese companies trying to do is kind of have more customized design or customized manufacturing technologies within their legacy chips, essentially trying to stand out or differentiate their products from the Chinese Chinese legacy chip makers. But I'm not sure that strategy will be enough to facing this significant pricing competition from Chinese players.
Stephen, your thoughts on what Taiwan is doing and how that is trying to accommodate basically this new competition or this immense competition from China, particularly when it comes to pricing?
Well, I think Ray is right that the only answer is going to be to find ways to move the value chain, whether that is becoming more competitive at a higher process node, moving into the 5 the 7 nanometer range as opposed to the 14 to 28 as the value that you're producing. Ray also talked about the customization of the chips, the interaction between the hardware and the software to make them usable within the devices in which they're being deployed. I think this is a case where broadly the United States, the West, are going to have to respond with innovation when China and its companies are electing to compete on price.
So the another aspect of what China is doing that's being very closely looked at is China wanting to reach self-sufficiency. China has aimed for 70% of semiconductor self-sufficiency by 2025. Those were their original targets, but is now closer to 20%. Stephen, what do you think is holding them back?
I think China is trying to replicate a technology strategy in the semiconductor sector that has worked effectively for them in other sectors like solar panels or electric batteries, where that technology is not as deeply sophisticated as what a semiconductor or what a jet engine or what an airplane is. And if you think about how the global semiconductor industry has evolved, it's the world's 4th most traded industry globally, and it's marked by highly sophisticated best-of-breed technology suppliers located in pockets all over the world. You have chemicals coming from Korea and Taiwan. You have photomask and photoresist from Japan. If you look at ASML, which has the world's most sophisticated EUV lithography equipment, the Cymer laser alone in the EUV machine has 480,000 parts, right? That's one part within a machine that has 100,000 parts within a factory that has another 100,000 parts. And the notion that China can fully indigenize this supply chain and be competitive at the very top end of the marketplace, I don't think is realistic. Now, can China get to a point where it can have adequate semiconductor tooling equipment through companies like SMI, Shanghai Microelectronics, or NARA at the 20 nanometer level? Yes, I think they can compete in older generations of technology on price. But I don't think that this industry lends itself to the type of industrial strategies China has deployed in other sectors. And I think if Western companies can maintain the environment which has led to the global specialization of this industry, it's going to keep companies like ASML, NVIDIA, TSMC at the very forefront. And China's going to have a very difficult time catching up at the leading edge of this industry. Dan Hutchison at VLSI Logic has a great line. He said, if we look at the leading edge, 10 years ago, China was 3 to 5 years behind. 5 years ago, China was 3 to 5 years behind. And today, they're still 3 to 5 years behind. So I think China will be able to compete in the legacy part of the business. I question their ability to compete at the leading edge in global marketplaces.
Ray, to circumvent U.S. curbs and other restrictions, China is investing in its own architecture like RISC-V and other kinds of technologies. Can you tell us how that's impacting or helping China's semiconductor manufacturing progress?
Yeah, I think RISC-V essentially is a kind of open source architecture for chip design. And that's one way that China can sort of circumvent export control while developing their own technologies for the chips they want to design. Right? I think that has been one of the core strategies for China. If some technology being blocked, right, you try to look for open source architecture to potentially work around with. I think the difficulty here is I think like as of today, I don't think there's that much like commercially like advancement in terms of RISC-V architecture chips. A lot of chips based right now in the market is not based in RISC-V. So I think the advancement for now is still limited.